Kate. I'm calling in from San Francisco, my office in San Francisco, and I'm a venture capitalist. I've been a venture capitalist for a long time. The vast majority of my career, I started out in 2012, and then I raised a $100 million fund in 2022, which I'm now, co-founder and GP of. But before that, I was actually an art history and cultural studies major who wanted to go into the arts. And so I'm sort of living proof that you don't always know where your path is going to lead you. And I'm very grateful for the career that I've had. I love it. It's truly like such a passion for me. And I'm excited to share like how I approach venture, what it really is in my life, or take the conversation however you guys want to go. But that's a little bit about me.
Awesome. Can we all start by just giving Kate a huge round of applause and thanking her again?
Yay.
So, as you mentioned, you do have a very unconventional path, and you started as an art history major, as you said. So, I'd love to start by just you sharing a bit more about your background and how that eventually led you to break into the VC industry.
So I don't know that anything about my background led me to break into the industry, other than the fact that I was raised to believe that I could like do anything and be anything. And that's actually an incredible place to start. So I went to an all-girls school that was very formative, a private all-girls school, and it was an amazing environment. I would say even living in Silicon Valley and having the job that I have, the peer group from my high school still remains probably the most impressive peer group that I have. Like my classmates are astronauts, and like my classmate who's a nurse, she's a nurse who like rappels out of helicopters to save people on the side of mountains. Like there was something about the school that really raised women who believed that they could be the best and that they had the ability to impact change and in the world in whatever kind of industry they went into. And so I think that that kind of foundational understanding about what was possible for me was a big part of what got me into venture and gave me the opportunities that I had, which really came from meeting people and kind of shooting my shot and going for it and not being deterred by the fact that I didn't have the right degrees or anything like that. So I think that's the first thing that I'll say. I also was just always very entrepreneurial. Like I was always starting clubs and starting side hustles. When I was in college, I started like a vegan cupcake business, and I was in college in like 2005. So I had a very early blog all around like feminism and domesticity and like cupcakes. And so I was just very early to that. And I always had something going on. And it was kind of part of how I thought. And so I didn't even understand that as really being entrepreneurial. At the time, people didn't talk that way. But it was like, hey, I like to start stuff. I like to do new things. And I ended up building a consulting practice in Los Angeles, where I grew up after college, really helping people learn about what social media was. And so I worked with everything from small businesses to like mid-sized financial institutions and really taught their C-suite about social. And then so my first real company was going in, learning about their businesses, building a plan and a strategy, and then I would hire my underemployed friends to run their accounts. And this was like before Facebook had business pages. It was just like personal pages that we were hacking and turning into business profiles. So it was very, very early. And so that was really the first kind of thing that I built and scaled. And then I took a year off to go build houses with Habitat for Humanity through the AmeriCorps program. And that was really just something that I wanted to do. I was tired of telling people what to put on social media. I didn't feel like it was again that like as impactful as I could be in my life. And so I wanted to go do this year of service. I was thinking about getting my MBA. But quite frankly, I didn't have the money for it. Like, and I knew I didn't want to be in corporate. I knew that wasn't me. But I didn't want to go into $100,000 of debt. And so I was volunteering on this job site, and this guy started telling me about an accelerator program that they were starting. And he told me that they invested in founders and then helped them build their companies. And I had never even heard of that. Like there was no, this wasn't written about on the internet at the time. YC had just started, so it was very early. And I was just like, I don't know what this is, but like I want to be a part of it. Like, can I help? And he was like, yeah, we need a program director. So that was my first job in venture. I was able to do the first 20 deals there and really started that program from scratch. I also started like a code school for kids out of the same program. And out of those first deals, one of those companies became a very successful biotech company. They were based in San Francisco. I came out to visit them in San Francisco. It was 2014. It was a wild time here, and I was just like, that's where I need to be. So I moved to San Francisco. I bought a U-Haul truck. I drove out here. That founder like falsified my employment letter so I could qualify for an apartment. And like I just moved here and worked started going to events and meeting people. And I got my first venture job, which was at a fund called Bolt. I was there for 8 years. I ended up going from associate to partner while I was there and learned everything that I needed to learn about not only like how to be an investor, how to gain conviction, how to be a board member, how to build a fund. And I really learned the craft by doing it. And then started Baukunst in 2022. So that's kind of my trajectory. And yeah, it's been a really beautiful and inspiring ride.
Yeah, thank you so much for sharing your background. And hi, Kate. Sorry, I just came back from sports.
It's
Thank you
all
so much.
good. Sports are important.
And it's so inspirational to hear your story about your 8 years where you started just entering the VC industry and you made partner. Congratulations. That's so huge. So, with all those skills, what did it take to start your own fund? And how are you able to raise $100 million?
So I think the number one thing it takes to start your own fund is to be absolutely nuts. And to believe that there's nothing else that you could do because it's so incredibly hard. Like I had many partner offers at big multi-billion dollar funds that you've all heard of. But I knew that that wasn't me. Like it's just not I'm not built to work for someone else. It's not who I am. So a big part of it was understanding who am I? What's going to make me happy? Right. And I knew that since I was, in college, maybe even before, like I knew that I wanted to start something that was just very clear about who I am. The other thing was a lot of the stories that you hear about how horrible most venture capitalists are as people are true. Not all of them. There are wonderful venture capitalists, but most of them, a lot of them, have very dicey, difficult, combative partner dynamics. And I had been in the industry long enough to know what it was like inside of those firms. And when you start to think about yes, this is my career, but this is also my life. You have to think about what do I want? How do I want to spend my life? Who do I want to work with? Right? We work so much. And so the people that you're working with are the people that you're in community with. Do I trust those people? Do those people want me to be the most self-actualized version of me? Do I feel like I can be my full self with them? These were things that were important to me. And so I was lucky to start the firm with three guys who I had worked with before. And I knew exactly the kind of people that they were. And I knew how they were under pressure. And I knew how they treated people when things were hard. And for me, it was very clear that not only did I believe we could build a great firm, I believed that that firm would build a great life for me and would do good things for the world. And that mattered to me more so than my salary or the brand name of the place that I was. And so it felt very in alignment. But I do think it's like empirically insane. I was like pregnant, I had no backup plan. And you just like sometimes you just go for it. And so I just went for it and just, believed in myself and went for it. And I think that's a little bit of that, like going back to what my high school was like, a little bit of that, of course I can do it. Like I don't know what will happen, but like I'll figure it out. Of course I can do it. And that's a little bit of that, like it's slightly nuts, right? But it kind of is what it takes to start your own fund. So that was a long-winded answer. I think the second piece was on the fund. Um, we raised in 2022, which was probably the toughest venture market to raise in the history of my life until this year, or the history of the industry until this year. Like only 2026 is harder than 2022 was. Um, and essentially, all of the things people tell you about fundraising didn't work. Like every type of investor that you would think would have invested in our fund one didn't. Like no one was deploying into new managers. Every single investor that we closed was someone that we had met, worked with before, been on a board with. It ended up being entirely relationship driven. And we raised $100 million from those kinds of people across the four partners. And so I think that's another thing of like, we'd all been in the industry for a long time, and people had gotten to know us and our work ethic and the quality of our work and really backed us because of those experiences. But it was not easy. It was very stressful. And it was also worth it. So I'm proud that we got it done, but it ended up being entirely through people that we had worked with before and built relationships with.
Mm. Thank you for sharing that perspective. I mean, I think that just goes to show how relationship-based the VC industry as a whole is, especially in times of more hardship like this year and like 2022. And I also love that you shed light on your entrepreneurial spirit because I think that a lot of girls in this room want to eventually start their own thing. I mean, Alyssa and I, we could have just joined the clubs that already existed, but we saw a vision for something bigger and we decided to take the risk. And it's one of the most rewarding things to have ownership and accountability over your own work. So really applause and congrats to you. And we'd also love to better understand why did you choose pre-seed specifically? What's so compelling about that? And also for those who don't know what pre-seed means, could you please explain that?
Yeah, for sure. So I think that there's many stages of like venture capital investing, but in many ways there's sort of two. And it's before it's obvious and after it's obvious. And like pre-seed, there's a lot of words for it, but what we mean by it, it's like the first round of funding that you're raising. When we invest, it's a person or two people. They have a concept, maybe a prototype and a plan, but you're really funding them to go from zero to one, to build it, to sell it, to figure out the strategy. And that is the phase I have always invested at. It's a phase that I love. I think it deserves its own attention. It's very distinct from post product market fit investing, meaning you know what you're making, you know who wants it, you know how to sell it, and you're scaling, right? That's a really different type of investment because sure, you're looking at the team, you're looking at the market, but you're really looking at the numbers, right? You're looking at the cohort analysis, you're in the data. I'm not a data-driven person, I'm a person-driven person. I happen to have co-founders who are data-driven people, so we make a great team, right? But pre-seed, you're looking to understand something before it's obvious, an opportunity before other people see it, and get to conviction on that person and that opportunity. And for me, it's ended up being an amazing match with my skills, but also what I love. And like part of what I have the ability to do is kind of see through the noise, right? See through the noise into what's not quite obvious. I'm a dreamer. Like I believe in magic. Like I'm very comfortable outside of the empirical. And so in early stage investing, the easiest thing is always to say no, right? Like the easiest thing is to be like, well, it won't work because of this and it won't work because of that. It won't work because of that. But at pre-seed, your job is to really think, what if? What if it did
Mhm.
work? Right. And
Mhm.
if it's gonna work, why would this person be the person who's gonna make it work? Right. So it's a very different way of thinking as opposed, it's all about possibility as opposed to looking at kind of empirical backwards looking data. Um, and it's actually where venture started. So the majority of venture capital today actually looks mostly what private equity looked like when venture started. So venture used to be about the first couple million to go build something, and then the asset class evolved for lots of reasons I don't have to get into. But yeah, so I love pre-seed for because I think it's a good fit for me. Also because the way that the like market works, like we get paid based on a percent of the assets we have under management. Pre-seed funds tend to be smaller, right? Because you're writing smaller checks. And so you make less money in the early days. And so naturally, as investors build their track record, they want to raise more and more money because then they can get paid more and more money. But what happens when you do that is you tend to need to write bigger checks because you can only do so many deals as any one person in a year, right? And so what happens is you tend to invest later and later stage. And so I think that because of that, like almost like the laws of human behavior, most experienced good investors have moved up market. They've moved into seed or series A or series B because that's where the big bucks are, right? But I think that that's created a gap at pre-seed, and my team, which is like a very experienced team, like we've decided to build a fund that's just really all about pre-seed, all about finding people, getting to conviction on them and supporting them in the 0 to 1, and that's all we want to do. So that's why our fund one is 100 million, our fund two will be 100 million, our fund three will probably be 100 million. Like we'll look and see what pre-seed looks like at that time, but our allegiance is to the stage, no matter what
Mhm.
it's called. And I think it's a really good fit both for like my skills, our team's skills, and also for where there's sort of a gap in the market broadly.
Interesting. And I think something that's so difficult about pre-seed is the fact that it's all about possibility and hope. Could you describe a little bit about your people-centered due diligence process and how you evaluate firms?
Yeah. So the first thing is when you're looking at making an investment at pre-seed, there's really only two things that matter. Is this person exceptional? And is this a good planet to land on? You do a lot of stuff to try and determine if those two things are true. And so, is this person exceptional is probably the hardest, most subjective piece of that equation. Is this a good planet to land on? It's kind of like, how big is the market opportunity? What will the gross margins be? Is there recurring revenue? Like those are all aspects that are knowable kind of about a market that might tell you, okay, if we actually build this thing, is it going to be valuable? But the first piece is it's very uh, open to interpretation. And I think that some of the things that we do, um, first of all, we do look at every cold pitch that comes in, and I have invested in cold pitches. So we don't just take warm intros.
Mhm.
However, I will say that is a wild exception, right? Like it's very unusual for that to happen. Most people will figure out how to get to us, right? Most of the best founders are going to figure out how to get an intro, how to network in. If they can't do that, my question is, are they going to be able to figure out how to network into other investors? Are they going to be able to figure out how to land that best hire? Are they going to? So it's a little bit of a test of can you figure out how to get to the person that you want to get to? Because you're going to have to do that. The
Mhm.
second thing is you're looking for somebody who is wildly compelling. And wildly compelling can be really different depending on what that is. A wildly compelling consumer founder might look really different than a wildly compelling founder of like a highly technical AI research lab, right? So it's not just like, oh, they were like main character energy in like the school play. Like it's not necessarily that, but you're trying to look for someone who has the ability to story tell, has the ability to get you excited, can clearly explain what they're doing and articulate it. And that's important because guess what? You're like the first of 10,000 people they're going to have to do that well to in order to build a company. So that's a part of like not even what you say, that's like how you show up. So, how you
Mhm.
show up is a huge, huge piece of this. And then, of course, we're looking at usually the pitch deck is like the backbone of the story that they're going to tell us. And we're trying to understand through that, how do they think, right? Are they
Mhm.
a systems thinker? Are they a deep thinker? And we're looking for some level of exceptionalism. And we
Mhm.
hope that that type of exceptionalism is going to be in line with the way that you need to be exceptional to excel at that company. So, for example, if you're building an AI infrastructure company, you really need to understand is this one of the top AI researchers in the world or not? Right? Or if you're building a consumer brand company, you really need to understand, is this person exceptional at consumer brand building? Is there evidence of this? And if they're
Mm,
earlier in the career, we actually just look for evidence of exceptionalism, period. Were they a
mm,
star athlete? Did they win national chess tournaments? Did they have evidence of greatness? Because people who achieve greatness tend to continue to achieve greatness. And so it doesn't even necessarily have to be like they've distinguished themselves professionally. It might be in college. Like we look at that, right?
yeah.
Especially when they're earlier in their career. So we're looking for evidence of exceptionalism. So
Mm,
we get to know them, especially if they're earlier in their career. We'll do like multiple diligence calls and I'll look to understand, are they integrating our feedback and growing over the course of that process, right? If I give
mm,
them feedback on their operating plan, are they then taking that feedback and sending me a new plan the next day?
mm,
Or are they not? Right? So how quickly are they learning? Right? How quickly are they learning? Are they growing? Because that a rate of change, rate of growth is an incredibly important thing for a founder because you're constantly in the unknown, right? Like that's a big part of being a founder. So we make all of this, these determinations over a course of meetings and looking at things together. We give hard feedback and see how they take feedback. And then we do a lot of reference calls. So we'll do what's called on-book reference calls and off-book reference calls. So on-book reference calls are like the people that you tell me I should talk to. Your former boss, your former professor. I'm going to call them and ask them about you and how you work. I'm also going to find through my network people who know you and have worked with you that you don't know that I'm going to call. And I'm going to
mm.
triangulate those. We just killed a deal today because I did an off-book reference on someone that we're looking at, and it came back extremely negative, and we're not going to invest, even though this
Wow.
person has a very high-profile resume. So
Mm,
reference checks really matter. That means, guess what? Treating people well really matters. Being high integrity really matters, right? So all of that is data that we use to make an assessment about how we think this person is going to be as a founder of this particular company, and what it's going to be like to work with them. So those are some
mm.
of the ways that we kind of get to know them.
Yeah, thank you for touching on those specific individual traits. But as you mentioned, like Baukunst is so much more than just you. It's a team of founders. So, as a board member of multiple startups, what have you observed about what makes a team as a whole very dynamic and how people combine their different exceptional traits in order to produce something novel and valuable?
Yeah, I think humility. Humility is huge. Um, I think the like ability to believe something and then change your mind when you get new information, right? So to kind of go to bat for something and then to be given new information and then to be like, oh, actually, in light of this, I'm wrong, right? Like that's like a really important team quality. And then I think the other thing, like we have this on our team, and you often see this with co-founding teams that are really successful. They have different special skills, right? They
Mm,
have like their areas of expertise and they're different. And we like to look at people who are like T-shaped. So they have a really deep area of expertise, like your CTO is hopefully a really deep technical leader, and they might be good at some other things at the top, but they're really deep there. Your CEO might be really good at sales and might be able to write a little bit of code, but they're really good at sales. So you're looking at people, co-founding teams who have different deep T's, if that makes
mm,
sense. If you have two people who are really great at sales, you might sell a lot, but you're gonna struggle to build the product. And so you're looking at how do you build a team. We like to talk about kind of like the old walls in France that are like made of funky stones that are different shapes. Like you don't know this how the stones are going to fit together. You get one stone, then you get another stone, and then you see where the gap is. And then you fill that stone in. Like building teams is like that. It's not like building a brick wall, right? You have to build kind of one piece and then the next piece and then the next piece. And that's especially true when teams are small.
Interesting. And I think that obviously Baukunst has had so much success in the VC industry. Congratulations to you. And clearly you found a good team. moving on to investments, are there any particular investment theses that you're excited about?
Yeah, I was just talking with another GP that just closed their fund, and he was asking me about this. And I have a little bit of like, I'll mention it because I was just talking about it. I'm a big believer in the creator economy. And by and large, people don't believe in the creator economy. Investors don't believe in the creator economy. I think they're wrong. I think that a lot of the investment ecosystem thinks about the creator economy as like creator tools, like tools for creators to like do their taxes or whatever. Like I don't, that's not how I think about the creator economy. But I really believe that we're actually at the beginning of what these platforms are going to do, and that in the last 10 years, we've seen the rise of commerce-oriented creator economy stuff like Shop My, I'm sure you guys are familiar with. Like they just did their Series C, right? Like they started out as a creator tool to help people, get to monetize on affiliate links. But really, what their business is now is helping brands seed product with influencers and helping brands find influencers at scale to advertise their products. So it's really a B2B company masquerading as a creator tool. And I think they're at a $2 billion valuation right now. The other kind of link in bio companies that came before them are smaller, right? Like Linktree is only $1 billion company. So arguably the creator tools hasn't created a lot of big businesses. But I think that's because they've been pretty narrow and we're actually going to continue to expand what the creator economy is. So like we have an investment called Bindery Books where um, Bindery basically turns book talkers and bookstagrammers into publishers. So
Mhm.
what they do is they find like top book talkers and bookstagrammers, they onboard them, and then they in turn onboard like their most rabid fans onto Bindery. And then we look at the data of how engaged those fans are, and we underwrite turning that influencer into a publisher based on that engagement and how influential they appear to be. Then that influencer can read all of these scripts, agented scripts, unagented scripts, and select what they think the next best book for their niche is. Right. And like they might have a niche reading community, like a very niche, like, I don't know, Nigerian Sapphic literature. Like there are like very niche reading communities, but where they really understand what people want in that niche, they then publish the book with their audience, right? So they're bringing the audience along, they're voting on the cover and they're pre-marketing that book. And then they're launching the book. And it's completely changed the economics of book publishing. So Penguin Random House did about $5 billion in revenue last year. Penguin Random House has no idea how to sell books to readers anymore. They still think of the retailer as their customer. They're completely disconnected from readers. And so it makes sense to me that the next Penguin Random House is going to be oriented around creators because creators are the ones that know what people want. Creators are the ones that know how to sell things. And if you guys are
Yeah.
familiar with like Hello Sunshine, right? Hello Sunshine was Reese Witherspoon's book club. She used that book club as a way to figure out what stories women loved and then used the success of those stories to underwrite turning those stories into Hollywood movies, right?
Mhm.
And so books are still the engine of IP for Hollywood. So this is like kind of Hello Sunshine at scale. So it's an example of how like Bindery is an investment in the next Penguin Random House, but really the like shift that's creating that potential is the fact that TikTok, Instagram, social media is how people are discovering what they want to read next. And the legacy players are no longer sharing economics in a way that makes sense because it's just not how it works anymore. So that's one area that like I continue to be interested in, like what new opportunities are there in a creator-driven world. Um, yeah.
That's a really interesting example, and I think one that is very unique given all the coverage that we see on VC right now. Like, I feel like when I open, for example, a newsletter from a VC firm, there's a lot about which technologies you'd be a fool to miss out on, which technologies are super hot. And I think part of that is kind of just the Silicon Valley noise. So, how do you parse through that noise and understand what's legitimate and what's kind of just another hype cycle?
So I essentially ignore everything that anybody writes about Silicon Valley, because it is mostly noise, it is mostly regurgitation or marketing, and most people have no fucking idea what's going on. So I have the privilege of doing that because I actually know people who do know what's going on. And so I find out what's going on by going to coffee with people and hosting dinners. And it's really through word of mouth and through my network. And that's how you can separate the wheat from the chaff, knowing who's full of shit and who's not full of shit. Very hard to do on the internet. I don't envy you guys for this, right? There's so much noise. Even like I started, I think one of the first VC TikTok accounts. Now there's like, I don't know how many VCs are on TikTok, but I'm going to tell you the ones that keep popping up in my feed, I've never heard of them and their funds. So
Mm.
like, and if I were you, I don't know how I would tell between me, someone who's been in the industry for 10 years and has a $100 million fund, and someone who says they have a fund and says they're investing, but and espousing all of this um, stuff that may or not be true. So I think it's very difficult, and like you have to check your facts and you have to figure out like who are the few people that I can trust. I do think that there's a couple of newsletters that like there's a couple of newsletters that I always read. And there are a couple of reporters who I really respect, and I know that they do good reporting, and so I follow them, and they're also friends. So I think figuring out not how do I read everything, but what's the one or two things that are trustworthy that I can read, that's helpful. And then a lot of it just comes from really talking to people who are inside of these companies and getting to know people and just really not believing everything that you read online.
Yeah, and I think quality over quantity is definitely a real thing when it comes to useful information for investing. And I'm sure you are a great judge of character when it comes to like valuable information that determines what companies you invest in and which ones you don't. But when you talk about,
Yeah, go ahead.
do you have something to say to that?
No, no, it's fine. Go ahead.
When you talk about all these other VC companies starting social media and TikTok, do you ever feel like pressure to outcompete other VC funds
Um, on social media or in general?
in general?
I mean, I think that um, one of the things that's interesting about VC is it's not what we call a market share game. You don't have to see everything or be in everything to be successful, right? You need to find a couple of great companies. You need to have a reputation where people are going to send you great people and do your best to help make people successful. And I don't need to be in every great exit. No one can be. You just need to find a couple of great exits. And so the thing that I think about is first, how do I have a strategy for the firm that I think is going to win? And how do I make sure I stick to my knitting on that strategy? Right. So, for example, and I believe right now in the market, because we have like these mega funds, right? Like Andreessa just raised a $15 billion fund. That's like the GDP of a small nation, right? That's like unheard of. You got these mega funds, they've really changed things. So I believe you need to be first or last. I think that
Mm.
like it's very difficult to be in the middle right now. And
Yeah.
so I believe that pre-seed is the right place to play. I do the math on what's it going to take to return a pre-seed fund. I don't need $10 billion outcomes. I need one, two, three, four, $5 billion outcomes. Great. Great. Like Bindery is not going to be a $10 billion company, but it's got a great shot at being a $3 billion company. And
Mm.
so that like I have a set of companies that I can invest in that actually Andreessen can't invest in, right?
Yeah.
Like buying a $3 billion exit doesn't do shit for them. And so I think about where's my lane? How do I do that strategy? And then I believe if you do the math, you need
Mhm.
to be able to underwrite. We underwrite, which means like we look at the underlying stuff that makes us think that any one exit could return our whole fund. So I only will invest in companies where I think that our expected ex ownership at exit would return us $100 million. And that's the
Mm.
like portfolio math that gives us how much we need to own and how much we're going to invest in each company. So my job at the fund level is design a strategy that I think can win and then
Mhm.
execute that strategy and don't pay attention to other people,
Mm.
right? That's where you've really got to block out the noise. Because if I say, "Oh, I'm going to average 15% ownership and I'm going to invest in 35 companies at pre-seed," but then I actually own like 1% of like a Series A company that Andreessen did because I think it's really hot and I should get in it, then I'm like not investing my strategy. Like if I think that's the right strategy, I should do that strategy and I should build a fund around that strategy. So I believe in like set the strategy, execute the strategy, be disciplined, and ignore the noise.
Yeah. Mhm. I love that. And I think it's so compelling that you're not doing every single thing every other VC and SF is doing. You're instead creating your own lane and doing something different than a lot of these big players. Um, Also, I was listening to one of your podcast episodes, and one of my favorite quotes that you said was, funding should be a mechanism for growth, not survival. I'd love to just hear what that means to you.
Yeah, I mean, I think that I believe in profit. Um, which like not everyone does. And there are lots of great companies that have made people lots of money that were never profitable. But to be honest, they never made a ton of sense to me. And I just like, I'm sort of in my personal finances, I'm always like, spend less than you make, right? There's like some simple things in this world. Like, if you spend less than you make, you're always going to have a surplus. That's good. Like, if you're a company and you're profitable, you can control your own destiny. You can choose to raise money if you want to grow faster, but if you don't raise that money, you're not going to die. And so, not all, you often can't get profitable right away, but I like to work with the founders around like what would it take us to get profitable? How long will it take? How much money will it take us to get there? And sort of have an understanding around like in any given board meeting, let's be looking at should we be driving for growth or profitability right now? There's always going to be like a trade-off there. And there are some companies like that are really capital light that you can grow without eating up a lot of capital and beautiful, like great, right? Like we have a company that they're they're doing over 100 million in revenue. They've only ever burned 350K in cash. The two founders just did a $10 million secondary sale. They own like all of the business, right? And they have a ton of room to run. Like, great, fabulous. Less dilution for me. Like, and that works for that business model. We have other companies like we're investors in a US manufacturing company that's doing batteries for like modular batteries for like fleet vehicles, very capital intensive company, right? It's going to take a long time for that company to get profitable. That's also okay. But we just want to have our eyes open about is this a company that's going to get profitable quickly or is it not? Do we have the right funding plan for that? And like be really clear about that. And revenue is the best money you can ever make. And I think a lot of people will raise venture for ego reasons. And we really want to fund the businesses based on what they need and what's going to build value, not just like to get the next hot markup or the next great logo. That's just how we think.
Yeah, that sounds wonderful. And I think for our final question, Sophia and I are really curious about what your future vision for your company is. Where do you hope to be in 10 years from now?
Oh, in 10 years. I mean, I hope we're still staying curious. I hope we're still iterating. I hope it's actually impossible for me to predict what we're doing in 10 years. Like, I think that I've really enjoyed having this very like iterative career, and Baukunst has continued to grow and evolve in ways that were have been surprising, right? We knew we wanted to be a collective, sorry. Ugh. We knew we wanted to be like a collective of creative technologists. We didn't even know what that meant when it started. And so we've continued to define that. And so I hope we can go deeper and deeper into our mission. I hope that the actualization of that mission will birth some beautiful, big, impactful businesses that also flow a ton of more money back into the ecosystem. And I hope we're known for treating people well and with respect and dignity, because that's really important about who we are. And truly, like our name means the art of building. Where our goal is to advance the art of building companies, products, teams. And I think we're doing that, right? And so I would love to look back in 10 years and be like, whoa, we did that in this way and in this moment. And to look back with joy, and know that we had fun along the way. Because we have a lot of fun. So yeah.
Wow, that was just an amazing response. Can we all give another round of applause?
Thank you so much, Kate, for taking the time to answer every single question so thoughtfully and giving us like a true insight of what it's like to be in the VC world, especially in technology. So thank you so much.
Yeah, can
My
we all give
pleasure.
a round of applause? It was an absolute pleasure to have you, and I can't imagine waking up at 4 a.m. every morning. I don't know how you do it, but I'm so grateful for your time and
You don't have to do it yet, so don't worry about it. Just when you're 39 and running your own funds and raising your kids, you'll find your own way to make it work. So, and maybe it won't be 4 a.m., but that's how I do it.
well, you were just phenomenal. And honestly, I think every girl in the room right now just hopes that they turn into some version of you. So
No,
thanks.
turn into whatever the version of you is, right? Like whatever that version of you is, that's the thing. And I will say too, like if you guys are working on like building tools or you want us to test stuff, or I would be so excited to like see what you're finding and what we should be trying and like give you like feedback. So like please don't hesitate to reach out and see if there's ways that we can collaborate. I really do like welcome that. So
We absolutely will. I actually started the startup and nonprofit incubator on campus, and so far we founded like over 30 startups. So we have a lot of innovation on campus, and I'll let you know if any of our founders would like to share their work with you.
cool.
Yeah, have an amazing rest of your day. Thank you so
Okay.
much.
Thanks, you guys.